What we'll do is we'll start here. And once again, if you're unsure if they even own a life insurance policy, this is a great time to be able to go to a place like this and look it up and see if you can find it. If that resource doesn't have it, there might be others. The main goal is if your client does have a life insurance policy and they've never had it valued, we want to be able to see what it could be worth and if it might be worth more as a buyout than for the current surrender value in the contract. When people ask us, well, how do I know? I don't even know what to gather. What do I do? How do I know if this policy could even make sense? The key would be to just use our basic qualifying questions. And as you see here, it's just really minimal information that you need to determine if a policy, what the death benefit is, what the age of the insured is, and things such as that. So it's very basic information. It's not very complicated. You don't need to know life insurance. Are we doing well on the recording right now? We're in good shape. Okay, good. I think Teresa might give you a hard time, but it's going to be okay. Many times from a liability perspective, we're being asked to document for record keeping. Did a policy have value or not have value? Because maybe you don't want someone coming back to you later, 2 months or 2 years down the road and saying, what about my parents' policy? What about our policy? So you might want something that states whether the policy did have value or did not have value before you decided to cancel it. So we do a lot of memos for record keeping purposes, things like that as well. Let's talk about a case study. In this example, it was with a guardianship. The mom had passed and dad was facing a lot of health issues. There was a policy for $400,000. Instead of them canceling the policy, there wasn't any cash value. They were able to value and appraise the policy at no cost to them. We just ran some indications of value, went through our process, and the policy was worth $100,000. There was 25 offers that were bid on this policy, similar to real estate if you had someone offering on a piece of property. So instead of zero, they end up with $100,000. Pretty amazing that they're then able to use those dollars to fund other needs in the future. We all know that costs are through the roof these days, and looking for any means to be able to pay for those costs is a really important opportunity for the client and for those that you serve, the families. In this, the adult kids, we're looking at ways to fund for caregiving and long-term care. Mom was 92. No one ever thought that mom would live past her mid-80s, and now she's in her 90s. They, instead of canceling the policy for $12,000, they were able to sell the policy for $225,000. Present that as an option to pay for caregiving needs. Can you imagine the difference in sitting with those that had this policy? They were about to let the policy go, and they end up receiving 20 times more than that cash surrender value. So it's an incredible way, or it can be an incredible way, to fund caregiving needs. And when we think about life settlements, yes, it is something that maybe you haven't done a lot of before, but this can be something that you can use for all different types of policies: whole life, term, universal life, variable universal life, all types of policies. It can be whole life also, but typically the most sought after policies are those with very little cash value, and whole life typically has higher cash value. But we still want to look at every type of policy that your clients might have. This client was looking to fund a special needs trust. The parents did not have additional liquidity. When they looked at the policy, they even had a term policy on this client, 70 years old, $1 million policy they were going to cancel. Instead, they were able to sell the policy for $220,000 and use the proceeds to fund the special needs trust. This became a lifesaver for the family. We see this one; it's always very meaningful, especially when they want to make sure that their loved one has their needs taken care of, even when the caregiver or the parent might be gone. This is what an auction looks like. And when I talk about selling a policy, all these competitive bids, it's not that different than if you sold your house or your real estate or anything else for a dollar amount. You would hope to have more offers than less offers. And in a life settlement auction, it's really important to receive more, and this ensures that for record keeping and liability, the best interests were served, as many offers as you can. You didn't just take the first offer, because as you see in this one, the first offer was literally 43 times less than the last offer. Pretty incredible, great news to be able to give to a family that has a policy that they no longer planned on paying the premiums, and turns out it was worth much more. When we looked at 1,000 policies that we had helped clients monetize, this was interesting. Right here, 21% were on people over the age of 90, 38% on people 80 to 90, and then 28% on those 70 to 80, essentially. The rest were younger with maybe bigger health conditions, but you can tell this is for the older age, advanced age marketplace. When you're talking about looking to fund the independence, needs for assisted living and other types of community needs, in this example, it's a $250,000 policy. The mail had already passed. Instead of canceling the policy for $5,000, it was worth $75,000. They were able to use those dollars to pay for all the assisted living needs. We've seen this across the gamut on, from skilled nursing all the way to shared housing, and just on and on and on, at home, caregivers, things like that. It's an amazing way to repurpose one asset to fund other planning needs as we go through that. When we look at the tax laws, we have articles that we can present on this, and I certainly won't overdo the taxes, but the good thing to know about this is there's been revenue rulings for the past 15 years where there's zero tax up to the basis, which are the premiums paid into the policy. From the basis to the cash surrender value is treated as ordinary income, and everything above that is a long-term capital gain. For the majority of these, it's at most a long-term capital gain, and we're going to be able to guide you through that process or work with any tax professionals that you might work with. On the right side of the slide, you'll see that it can be tax-free if there's a 2-year life expectancy or less, or they're chronically or terminally ill. That's called a buyout. Most of the opportunities that we work with are from people that are over the age of 70, and they have around a 15 to 20-year life expectancy or less. Policies average 100 to 50 million. I know those numbers seem really big. We do still have buyers for policies in the $50,000 to $75,000 range, but most of them tend to be 100,000 and higher. No medical exam is required. As we said, we just gather some of the existing medical records, and we let you know what a range of value can look like. We have a probability calculator that feel free to use this on your phone if that's helpful for you to be able to do it. But we'll also send this out in our resource link for you. That gives you an idea if a policy could have low, medium, or high probability of having an offer in the marketplace as we go through that, as you come across opportunities. For those of you that like to read, there's tremendous amounts of journals and white papers that we've written. These are ones that when the family asks, can you tell us a little bit about this company that we're relying upon, to go through this process, we can provide these to you to also take a look at as you go through it. And each of these will talk about anything from the process to tax consequences, what you can expect for an offer, and things like that as well. We have a publication coming up in in April in Trust and Estates Magazine that you can also take a look at in the next couple of weeks that you'll also be able to see. We're really here to guide you through any part of the planning process that involves life insurance. So if you're unsure if a policy could qualify, just give us a call. Shoot us an email and say, I have a client. I think this is what they have. What do you think? Could this make sense? Does it will it not make sense? And we're going to guide you through that the entire time. The goal is that you always are taking a look at this to make sure a policy never lapses that could potentially have a cash surrender value, or excuse me, a value that's higher than their cash surrender value. We can also help with valuation of policies if they're donating or gifting, but that's really another webinar that we'll look at. Many times we're asked, how can I, speed up the process if I want to get this moving faster? And many times we'll have calls with the family in week one. We'll help or work with the family to gather the medical records. As I said, they never get examined. We just gather those records. And we'll help them also work with them to gather documentation we need from the carrier or any other types of documents. It could be looking at a trust, looking at any of the ownership documents, things like that as well. And we're going to start opening it up to questions soon. So, feel free to start including those questions. If not, we're going to go through some of the most common ones that we have. This planning checklist is also going to be a tool that we're going to send out to you. This will give you an idea if a life insurance policy may or may not qualify for a life settlement. You're going to understand a little bit more about the needs of the client. Maybe they should keep the policy and not sell it. So we'll go through all those types of things. But the key takeaway is always a buyout of a life insurance policy might be more favorable than just surrendering it. It doesn't mean it's always going to be the right answer. It might mean they should keep the policy if the policy is worth 3, 5, 10 times more. But that's something that we can all have a conversation about. And we'll discuss the pros and cons, what it might take to keep the policy, for another 5, 10, or 20 years versus selling it for a buyout today. Most of the insured are in their 70s and older, although we can work with those that are younger than 70 if there's health conditions present. It's around a 20-year life expectancy or less. You always want to document the decision with some of those memos that I showed you a picture of for record keeping, because last thing you want is someone to say, gosh, I can't believe my parents canceled that policy and it could have been worth something. Did we leave money on the table? There could be some liability from that perspective. And then always, we want you to update your documents and your assessments, your discovery tools with adding life insurance, date last appraised or valued. And once again, you don't need to be an expert. Give us a call and we'll do that. There's lots of shareable content that we can also go through that if you have newsletters, we want you to ask us. We have tons of thousands and thousands of blogs, articles, case studies. Ask us. And if you drip market on any of your relationships, attorneys, clients, others that you work with, let us know and we're going to help you. We have lots of content that our team knows how to help give you in a format that you can use throughout your process, throughout your workflow as you go through it. From newsletters to white papers and on and on. I'm going to answer a few questions before we start to wind this down because I wanted to make sure that we saved enough time. My experience in doing these is that we usually have everybody's attention for somewhere between 20 to 40 minutes, and then their mind drifts off or they have other needs that come up or other appointments. So I'm going to slow down for a minute here and answer some questions. And I have lots of common questions that we also get asked. As we do that, though, I'm going to make sure that you have a little bit of my contact information. Please connect with me on LinkedIn. That testimonial video was an amazing family that I hope you kind of use your phone and use the QR code as you go through that as well to take a look at that. Let's go through some additional questions that we have along the way. I have one question here that says, do you prefer term or cash value for coverage? And which is better for a buyout? The lower the cash value, the better and more attractive a policy is for a buyout. So that's really important. The lower a policy cash value is, the better it is for a buyout. So that's number one. Because all the different funds that you saw compete in that auction that we work with, They have hundreds of millions to billions that they want to deploy. They do not need cash. So a policy on a client that is, let's say they're 80 or 90 years old, it has 3,000 of cash value in it. That will be more attractive than if it has 30,000 of cash value, because there's more net death benefit that's a part of that policy. So the lower the life expectancy, the higher the offer. Does that make sense? The lower the life expectancy, the higher the offer. Let's look at another question. Is there a charge if the client and or the guardian decides the buyout is not appropriate? There's not a charge for that. Okay. So they can go through the process. The only time there's a charge for anything is if you want, for record keeping, we do have memos that we can put in that they're typically pretty inexpensive, a couple $100 for a memo, something saying the client decided to forego this process and maintain the policy, not receive the buyout. Many times we'll have that memo because people, they want to make sure that if they decide to keep it and they happen to cancel the policy or lapse it, you don't have any family member that comes back to you and says, I can't believe you left $20,000 on the table. Didn't you advise us? You want to be able to take that record, that memo out, and demonstrate that you did go through that type of a process for doing that. Feel free to keep asking questions. If not, I have a lot of our most commonly asked questions. People always ask, what's the usual time frame for qualifying a potential opportunity? Let's say Lori runs into somebody today and they say, Lori, I'm trying to cancel everything. I'm trying to qualify, for an approved spend down. I'm trying to do something to get rid of it. I need to lessen my expenses, and I have this life insurance policy. We can probably know on the first conversation if it looks like there's a path forward at all. If you said, my client, they're 62 years old, they're healthy, they appear to be healthy, and they have a $100,000 policy, I might look at that and say there's no chance that your client would qualify, because it's around a 20-year estimated longevity. And with a 20-year estimated longevity, they're going to live well beyond that so the economics don't make sense. So if you wanted a memo for your file, then that's a different conversation. Then we can do that. If Lori came back and said, I have a client, they're 87 years old, or they're 80 years old, their policy has very little cash value in it. So I don't know much about it. I just know it's a $150,000 MetLife policy. What do you think? I'd say, well, let me take a look at any documentation you have, and we're going to give you an idea if we think it could have value or not have value. So we'll know in conversation one, and definitely week one, if we think there's a path forward on that. So it might be a very quick no, or it might be a maybe right from the start. The whole transaction time frame itself usually takes around 90 days from beginning to end. No different than if you were selling any other piece of property, your house or a car or anything else. A car might be a little bit faster than that, but a piece of artwork, jewelry, a business, anything like that. Another question that we typically ask is, are there licensing requirements for you for participating in this? We are the licensed party in this. The only individuals that need to have licensing are those that are receiving some form of compensation or fees. So unless you're receiving compensation or fees from the life settlement transaction, you do not need to receive a license for this, for anything like that. Another question that we have is, what's the average age? What's the youngest? And what's the oldest? And it's really life expectancy driven. We had recently helped a woman. She was 47 years old. She had breast cancer. She ran a business for treatment centers for young women with addiction issues. She sold 2 out of her 3 policies to pay for an executive team to come in and run her business while she focused on getting treatment. So she was younger, saved her business and saved all those young women relying upon her addiction centers. So my point is, it's really life expectancy driven, not age driven. It's somewhere in the 15-year, maybe 20 years or less, regardless of age. We've had people that have said, Mom's 96 years old. The policy goes to literally to age 110. We're sick of betting against mom. She's fantastic. I feel guilty. I don't want to continue paying this premium. Asking mom, how are you feeling? So they'll say, I'd rather just, the insurance did its job. Let's sell it, get as much as we can, and move on. So that's another one that we have. Can a policy be sold that's in a trust? We get that question a lot. The answer is absolutely. We deal with policies, about almost half of the policies we have are in some form of a trust. Could be an ILET, a special needs trust, anything like that. So that's very common for us. Who has to agree to participate in the transaction? That's another really important question we have. The answer is the insured and the policyholder. Anybody that has a vested interest in the policy has to agree to participate, period. There's no way around it. The insured, no one can sell a policy on an insured without their participation. So that's important. And the policy owner has to sign off on the transaction. Is there a limitation to policy size? It's really, as I shared, on the smaller side. It's usually that 50 to 100,000 are the smallest. Most of the buyers focus on 100 and larger. But if you have some that are smaller than that, please reach out to me. Certain buyers will look at it on a one-off case, so that they don't focus on policies that are less than 50,000, but that is important for us to look at. Just give us a call. Many times we're asked, who's purchasing these policies on your auction platform? Who are these? Are these individuals? Are these banks? Who's doing that? And the answer is these are some of the largest pension plans and institutional asset managers in the marketplace. They see this as a non-correlated asset. These are not individuals down the road. That's a little awkward and uncomfortable to be, call it as it is. These are just some of the largest, Blackstone, BlackRock, Apollo, Warren Buffett had allocations in this space, things like that as well. Who does this market most impact? It's retirement age clients, those that are typically in their 70s to 90s. That's usually who we usually focus on. But if you think about it, a lot of the adult kids and grandkids of those that are in their 70s to 90s are the caregivers. They might be spending their own assets down, trying to care for mom, dad, or grandma or grandpa, right? They may not be, achieving in their job. They might have to lose their job because they're going through all this process. So this really is a multi-generational, assistance for those that are really spread thin by the stress of dealing with clients going through these issues.
Hey, John, we got a question that actually came directly to me. So
Okay.
I'll ask it to you. One of the Guardians has a $120,000 term policy. The person is age 66. She called for the cash value and told there was none. Can anything be done?
That would be one we'd want to look at. So we'd look at that. I'd always want to say, how's the health of the 66-year-old? A healthy 66-year-old could have a 25-year life expectancy, where in a bell-shaped curve, all the actuaries within our space would say half of the people live longer than 25 years, half will pass before. So I'd want to understand, what does their health look like? They never have to get examined. We would gather their medical records and we'd have a better idea. Our first step might be just a qualifying questions from that one slide I showed that has qualifying questions though. So I'd encourage you to reach back out to me after and give me an idea of, it's 125,000, it's a term, who's the life insurance carrier, age of the client, are you aware, do they have standard health, moderate health conditions, more significant, things like that. And we'll go through that. So hopefully that's somebody we can help. I hope so. Other questions that people ask are, what happens if a client just wants to cancel a policy? Does that affect Medicaid or anything like that? This can qualify as an approved Medicaid spend down if they take the dollars and they put the proceeds into a bank account that's put in place to fund caregiving. That can qualify as approved Medicaid spend down. So that's another nice question for people, or to answer that question, I should say. Another question that we always get is about tax treatment. I went through that a little bit, but our articles will talk to that again. The majority or long-term capital gain, or 100% tax-free based on the settlement proceeds. If it's higher than what they paid into it, if the proceeds, excuse me, what they paid into it is higher than what their settlement buyout was, then it's a tax-free transaction. If not, the amount over what they paid into it is long-term capital gain. So it's pretty simple. That'll be within our article that we send to you. How can we talk to our clients about this is always one of the key questions. I'm not an insurance person. I don't get it. I don't want to be an insurance person. Our answer would be just add life insurance to your questionnaire. When they complete that, give us a call or shoot us an email. My client says they have a policy. Here's their age. They seem healthy or they have some health conditions. Does this look like it could qualify? Something like that. So those are some of the main things that we want to go through. Do I have any other questions along the way? We have, another probably 5 to 10 minutes that we can go through to talk about this. Is my monotone voice boring many of you? Would you like me to read something to you at night? I'll let you guys say. So just by another, then I want to take some kind of informal polls as we do this. Out of all the people on the call, how many here currently have life insurance on their checklist? Yeah, give me a show of hands. How many of you actually have it on a checklist that you have? CSC, let me see, there's 4. Okay, 5, I see, maybe 4 or 5 people, unless I'm missing people here. So does this seem to be an intimidating type of subject for you to have? Or is there any reasons that someone would put in the chat why they would not add this to a checklist? Because my goal is to really positively impact lives of those that we serve. And I would like to understand, because I want to be able to answer questions around that. Is there any reason why someone would not put this on their checklist? There might be some legitimate reasons. If not, I'd love for you to put that in the chat. As we go back to to look at that, I'm going to come back a little bit to a few of the key slides as we wind this down. And give me a moment here. When coming back to the planning checklist, if there's any other resources other than a planning checklist that you feel would be helpful in guiding the conversation, I'd like you to let us know. Okay, if there's questions around life insurance training, if there's questions around the actual dialogue script on how to have this conversation, we want to make sure you let us know these types of things, because although we know forms are easy to get completed, sometimes having the conversation itself. For those of you, can you maybe put your hands down on the Zoom? And I want to ask another question about this to the group. For those of you that now understand that you can potentially receive a buyout of life insurance, knowing it could be worth many times, 3, 5, 20 times more, can you see there as potential risk or liability for not disclosing this option for those that are looking at all the assets on the balance sheet, whether that's you or someone else? By a show of hands, if you think that could cause potential risk or liability, I'd like to see that. I want to get a feel for it. Okay. Seeing a lot of hands that went up there. And all right, that's important for us to know. You can place your hands down. Thank you for sharing that information too. I think the key for you and for each of you is really around the record keeping slide that we had. Unless you're taking perfectly good notes, the world wants independent record keeping. And I'm hopeful that some of those types of resources are the ones that are going to really, whether, as I said, 2 months from now or 2 years from now, are going to be the ones that make the key difference in protecting yourself as a professional or defending a decision that was made years ago. That's probably been our biggest uptick. I would say our uptick in working with those that see themselves as a fiduciary to the client or a trusted advisor it's probably up somewhere between 500 to 600% since last year. The amount of record keeping documents that we have, where I think everybody sees themselves with a target on their backs. And that's something that, frankly, you just need to be careful about and thoughtful for as you move forward. So I'm hopeful that some of those types of resources can really be helpful to you as we go through it. Any remaining questions?
There is,
Any?
there's one that just got put in chat, John. It says, how do you obtain the beneficiary's name when the insurance company refuses to do so until payout? We have the beneficiaries involved in the court hearing to cash in insurance and annuity policies. Or we have to have the beneficiaries involved. It's a question. So yeah, how do you get the beneficiary names on the insurance if the insurance company refuses?
Sure. Well, number one, we can help guide you through situations like that. You can also call the state insurance department and put a complaint in. And my experience is the carriers tend to move pretty darn fast when you do those types of things. That NAIC resource that we'll make sure to include in the follow-up tools that we're going to send you will help you understand who might have a policy. If I can get back to that a little faster, I'd be happy. I think it was at 12. But the documents that we obtain from the carrier, we know how to request certain documents that will have typically the beneficiary names on those. So depending on who the carrier is, I'd be surprised if they didn't respond to certain documents. So you're welcome to email us and we'll see if there's something that we can do to guide you in that position as you go through that, because that is the problem. It shouldn't be, but it is. Many of these carriers, they kind of move at their own pace. And that's been a struggle. It really has for us as well, been a struggle to get these carriers to move faster. Things that should take 24 hours sometimes can take 5 to 10 days. So we'll hopefully be able to help you with that. That's the record keeping piece. And I think we're going to get right to it. There we go. I would use this. And the NAIC, National Association of Insurance Commissioners, they also are people that you can contact and let them know that the carrier is not providing the information that you need to do your job responsibly. But there's certain forms that we can send to a carrier. One is called a verification of coverage. Another is the NAIC verification of coverage. There's another specific one that fills out, and they have to complete all this information, and they have to do it typically within 30 days. I wish it was faster, but welcome to the state where they do things like that. Any additional questions come in that I missed? Let me see.
Not that I see, but guys, if you have any extra questions, please pop them in the chat. Let us know.
I was told this was going to be an active group of questions.
I was telling you, without Teresa, Teresa pokes everybody, I think.
Let's see if I see any other hands go up. I see Mary's hand up.
Yeah, Mary, I don't know if you have a question or if your hand's just raised from previous. Nope, she put it down. It was just still up.
Okay. Well, then I guess if I'm going to wind it down, what I would say is that see our company like they see you as an active resource that will proactively help assist and guide through the process. This is something that we're trained to do. We're trained to work with professionals like you. We show compassion in working with the families that we serve. As she started, we are a family-owned business, and we understand the importance of treating people with dignity and guiding them through a process. I'm hopeful that this has opened your mind to many types of situations within the life settlement space. And I hope each of you have a chance to do one simple thing: add to your intake form, add to your screening form, your discovery form, one question: life insurance, with a little comma or a line next to it, date last valued. If you get that, that will trigger conversations. When the client says, what does that mean? You'll be able to say, There are times when a policy can receive a buyout that's higher than the cash surrender value. This may or may not be one of those times. I'm happy to explore it for you. So I'd like to thank everyone today. If there's no more questions, oh, I might have seen two more messages. Hold on here.
There's no questions, but there are
Oh, no
people
more
thanking
questions.
you for the great topic and the
Oh,
business
that was
information. So
nice.
everybody said it's great information and then they thank you for it.
All right. Well, I'm happy to have served each of you. If there's any other questions, just feel free to contact me again. I'm going to send out a sheet that'll have all of our different contact information, resources. I'll come back to the end here
Yeah,
and get that in
I
front
was
of you.
going to ask to put your contact information back up, but yeah, everybody's thanking you. They said it was very informational and helpful. So thank you, John.
Well, each of you do amazing work. Oops, I just hit the wrong button. I'm a former school teacher. You know, before I became an entrepreneur, 25 years ago, I was a second grade school teacher in the Orlando area, and I loved it. And I ended up, going into the business world and kind of carving my path that way. But as a teacher, my heart was always, there with the families that we served. And that's something that I taught second grade so it was one of these things where I saw families go through so much, and they depend on individuals like you to do your job, and you do it so well. And it was online, or probably harder than what I was doing, because you have to really, weave in so much going on with the state and things like that. So you're doing an amazing job, for people that, I'm sure have a lot of gratitude for you, or if they don't, I hope you know that people like me are out there very impressed and grateful for what you do every day. So I hope you each have a wonderful 2024. I hope we talk before the end of 2024, and there's those we can help you with. And I hope each of your families have a safe and healthy rest of the year as well. But please don't hesitate to reach out. Thank you.
Thank you, John. And look, Becky gave you a little heart if you see that floating around on her screen.
Yeah,
But
I like that. I'm
thank
mushy.
you for this
I
information.
like that. It's very kind of you. All right. Have a great day,
Have a
everybody. Thank
great
you.
day, everyone. Bye-bye.
Bye bye.